Hi, very good afternoon to all the viewers who've joined us today for this webinar on the fastest way to get a higher ed loan. So my name is Rakhi Talukdar. I'm a senior associate at upGrad, and I believe all the aspirants here are inclined to study abroad. So studying abroad is, of course, a huge decision for students. And there has always been an increasing number of students from India who've chosen to study abroad, primarily driven by better quality of education, more scope, global exposure. But as we speak, we have noticed a trend where the growth of Indian students who are opting for higher ed abroad has currently even outpaced the domestic student growth. And this number by 2024, so if you're looking at the Indian student base who are going to study abroad by the year 2024, we're looking at a student base of approximately 1.8 million. And that student base is expected to spend anywhere between 75 to 85 billion dollars overseas. Now, one of the factors that greatly influences student outflows is, of course, finance. And as we speak, although accessibility today has become much more, and there are also lots of options for students to go ahead with student loans as well, but the cost of education are still spiraling upwards. And if you were to study abroad, you can be expected to spend anywhere between 30 to 40 lakhs. And this, I'm just talking about tuition. So naturally, all the viewers who've joined us today, I'm sure you have this ongoing debate in your minds that if I were to take the plunge to go abroad, should I dip into my savings, or whether I should opt for the route of financing through a student loan? And if yes, then how do we proceed with it? So today we have with us Aman Jain. So Aman, thank you so much for being here. Aman is the Chief Marketing Officer at GyanDhan, and GyanDhan is India's first education financing marketplace whose vision is to democratize high-quality education by providing accessible student loans through their end-to-end loan options and services. So thank you so much once again, Aman, for being here today. And I'm sure everyone is very keen to hear more from you, and they hear more from you and understand all the intricacies that go into applying for an education loan abroad.
Right. Thanks, Rakhi, for the introduction and the warm welcome. I really enjoy doing this session, so we keep doing this session every month or so, and happy to help wherever we need. So I would want to start with a brief introduction about GyanDhan, and from there on, we can go ahead and talk about education loans in details. So GyanDhan is an organization, as you correctly mentioned. We are here to equalize and expand access to education. We started back in 2016, and since then we have helped 10,000 plus students getting abroad education loans. Primarily, the reason GyanDhan was started was because abroad education used to be a premium thing, right? Back in let's say 2014-15, only the students who were meritorious or who had good access to money or from the very good background, they used to think about study abroad. And one of the primary reasons why that was so is because of the cost of education. So like somebody from the middle class, or even upper middle class, they are always thinking that, okay, hey, how will I get this 30, 50, 40 lakh rupees? And thanks to the fintech revolution in the last 5-6 years, now we are at a stage where education is accessible to all. Loans are available easily. There are platforms like GyanDhan that helps students getting education loan through various lenders. So the students don't have to go anywhere and just reach at one platform, GyanDhan, and apply for an education loan end to end. So that's a brief about us. I would love to take it ahead from here. More questions from your end.
Yes, absolutely. Thank you for sharing that brief detail. And I believe when I've gone through GyanDhan's website, I believe that the vision why this company was also started is because you all as founders have also faced similar concerns when pursuing your education abroad. And the whole idea was to make it more accessible and also provide sustainable financing options.
Yeah.
So we have a great audience who has joined in, and I'm sure a lot of questions will be cropping up in a while. But to begin with, to begin this discussion, Aman, I would just like to know that what are some of the things that a student needs to keep in mind before applying for a student loan abroad? So,
Right.
of course, there are various factors like academic performance, and let's say the destination country as well, the course that the student is opting for, and even the university. So can you throw some light on what are the fundamental points that a student needs to take care of?
Sure. See, so ultimately, the lenders who are giving the money, right? What are they concerned about? They're concerned about that, okay, hey, I'm giving money to this student, whether I will get the money back or not, right?
Yeah.
And that is primarily being decided by which college and country you are going. So as a student, your aim should be that, okay, hey, can you, I'll switch off my camera. I think there's some issue. Yeah, right. So as the basic, as I was saying, the fundamental is that, okay, can I get the admission from the top university out there, or from the best university I can, right? Not everybody will get the admission from Harvard. Not everybody will get the admission from Stanford.
Right.
As per my potential, can I get the best university out there and best course? If that is so, then financing is sorted, right? Obviously, there are nuances that we are going to talk about. I would want to take a couple of minutes and talk about all the financing options that are available for a student that a student can opt for. Uh, so primarily, I would say education loan should not be the first thing that you should opt for. The first thing should be scholarship. Now, when you go abroad, there are so many scholarships that are available. In fact, GyanDhan also offers a couple of scholarships. So
Okay.
when you're going abroad, you have to keep all such a scholarship in one place, and you have to do the research and apply to as many as you can. Now, there are very less chance that you will get the 100% finance through the scholarship. But most of the students, if they apply at the right time to as many scholarship as they can, they
Right.
will get this small token of scholarships like $10,000, 10,000 euro, 5,000 euro, which is a big amount when you convert to INR, right? If you're getting $10,000, which is 8 lakh rupees.
Right.
So that is something that students should keep in mind. Now, when people go abroad, and we obviously keep seeing it in the movies and TV series, that people, when go abroad, they work, in restaurants, in cafes, in general stores.
Yeah.
So there is a good amount of money, and especially the living expenses the student can get from either the part-time job or the assistantship.
Right.
Part-time job, let's say if you're going to US, you are allowed to work for 20 hours a week, and
Yes.
for each hour you get approximately minimum $10. So $200 per week is what you can get, which is, let's say in a year, if you are working for 40 weeks,
Hmm.
considering exams and all, so you should be able to make $8,000 then and there only in a year, which is another 7 lakh rupees, right?
Right.
So if you work for 2 years, then that is 15 lakh rupees you can get there. So now if the total cost of education is 30-40 lakh rupees, you can make 10 to 15 lakh rupees just by working there as a part-time job or assistantship under any professor, and the scholarship. So half cost of education can be covered through this
Correct.
small means if you have approached this points correctly. And then comes the education loan. And I really like the point that you mentioned at the start, that hey, should I use my own money,
Yeah.
or should I go for an education loan? And
Right.
we, obviously, as we are an education loan company, we are a big believer of using education loans. I'll tell you the reasons why.
Yeah.
Right? So why one should opt for education loan? Uh, Primarily, there are many reasons. Let's start with the one most important, which I think is the most important. It's the double tax saving,
Yes.
right? So when you take an education loan, whatever interest that you're paying to the government, whatever interest that you're paying to the bank, you don't have to pay tax on that to the government. So primarily, let's say in a year, if I'm taking a loan of, let's say 40 lakh rupees at an interest rate of 10%, that is 4 lakh rupees interest per year. Now on this 4 lakh income, I don't have to pay tax. right? So many people, in fact, we have done loans for celebrities as well. And one would think that why celebrities will apply for an education? The very reason that their CA recommends them that, okay, use education loan so that you get the tax rebate from the government. On the top of it, and this was increased in the recent budget. So when you send money abroad, there is a tax deduction at the source of 20%. So let's say you are sending 20 lakh rupees abroad on your own for any purpose. So 4 lakh rupees will be deducted here by the government at the TDS. Whereas if you are saying that this is an education loan, this number is just 0.5%. Obviously, so this money government is deducting, it will come back to you later. Let's say if your income is not that much, it's not an expense, but it really can mismanage your cash flows, right? Because if you have to send 20 lakh rupees today, then you have to approximately arrange 25 lakh rupees, because 5 lakh rupees government will deduct at the remittance only. So that is why the education loans are becoming more famous because of the double tax that the instrument is saving for you. Apart from that, it helps you keeping your personal savings intact. Let's say you can keep that for any rainy day. Education loans cover a wide range of expenses, and there are education loans that are available where repayment starts after your course. So let's say if you're going for a 2-year course, then your repayment will start after 2 years, right? So that is again for the 2 years, and this is especially people going for masters. People think that, okay, hey, my parents have already paid for the bachelors and all the other expenses, that let me do the master's degree on my own. And at the end of it, all of this helps you becoming financial more disciplined. So you know that, okay, you are going abroad, there's a loan on you of 20 lakh rupees, and you have to repay that back. And that obviously we don't say that, okay, you should take much stress about it, but you should be sensible enough to understand that, okay, this 20 lakh rupees I have to repay. There is a timeline to it. Once I graduate, after 6 months, my EMI will start. If I don't do my study well, there is a chance that I won't get a job, and I won't repay this money. And that is why an education loan is something that uh, one should opt for as compared to directly funding. Yeah.
Sure. Thank you, Aman. I think you've touched upon all the pointers to show why this appears as a more sustainable option. And of course, today when we speak, there are more number of NBFCs. In fact, the number of NBFCs who are offering loans, when we talk about accessibility, is almost 82%. So
Yeah.
there are plenty of avenues out there. Learners, of course, have this question that, yes, I would like to take up an education loan, and there are so many benefits to it as well.
Yeah.
What is it that you are going to consider before allowing me the opportunity to avail of a education loan? So in that, let's talk about, for example, if a learner is going to a particular destination, and of course, some destinations, especially the Anglophone countries, let's say like US or UK, they are associated with top level higher education. And naturally, as an NBFC, as a loan partner, if you are, offering a student loan to anybody, you're doing that to a student who you typically consider as an investment, with the hope that, yes, this will not turn into a bad debt, but you will have the repayment once the learner finishes the course. So, in terms of that, what kind of an influence do these pointers have? This destination, let's say, even let's say the course that the learner chooses. Because some courses, like let's say we're talking about STEM courses, and STEM courses are known to have higher earning potential. So
Right. So
you can throw some light on that. Yeah.
Sure. So before I answer that, I need to cover a special aspect of
Sure.
the loan, because that will come handy to answer your question.
Yes.
Typically, there are two kinds of loan. One is the secured loan, other is the unsecured loan.
Right.
Right. The secured loans are the ones where you have to go give some security. That can be your house, your FD, or any other government bonds as a security against which the bank will give you the loan. Whereas in unsecured loan, no security required. It will primarily depend on the factors that you mentioned, which is college course, exam, target country, your co-applicant income, and all of that. Now, while deciding which country and college to go to, from the financing perspective, you have to keep that in mind that, okay, hey, if you have a collateral, uh, and this collateral, all the papers should be in place, all the collateral related papers should be in place. If you have the collateral, getting education loan is very easy, because primarily what you're doing is you're giving your home and saying to the bank that, okay, hey, entire risk on is me, right? Because if I don't repay the loan, then you can sell my property and recover the money.
Right.
So as long as you have the collateral, it doesn't matter for which college and course you're going for. You are eligible for loan for all the colleges and all the courses. Is obviously the degree that you're going for should be affiliated by the local government there. It should not be that, okay, you're going for a course or degree which is not affiliated with the government governing bodies in the country itself.
Right.
But not everybody has a collateral, not everybody has the property, and that is what we were talking about, that accessibility has increased.
Correct.
So unsecured loan you can get without collateral, and in fact at times without co-applicant as well.
Okay.
We work with a couple of international lenders that gives loan without collateral, without co-applicant. Now that depends on the college and course you are going. Correct. Now, so just to give you some sense that if you're going to the mainstream countries like US, UK, Canada, Australia, Germany, right? If you're going to all of these countries and going for a respectable course like Masters, MS, MBA, any master level course, any PG level course, diploma also works. Like Canada is very famous for PG diploma. All such courses, the loan up to 20-25 lakh rupees without collateral is available easily, as long as your parents are earning 50 to 60,000 rupees per month, and according to the paper. Like obviously they should file the ITR. It cannot be that, okay, my father has a kirana shop and he doesn't file the ITR, so you won't get the money. Yes. In that case, you will only get the money if you are going to one of the top colleges, because bank has to see something, right? They will, right? Either they will see you're going to one of the top colleges, then obviously they will give without collateral, without co-applicant. So there is a list of the colleges for which you can get loan without collateral, without co-applicant, irrespective of whatever your parents does or how much they earn, whether you have a collateral or not. Then second category, not so top colleges, but your co-applicant earns enough, 50-60,000 rupees per month, then you are eligible for 20-25, in fact 30 lakh rupees as well, unsecured. Right. And then the third category where your co-applicant also doesn't earn and you are not going to a very top college. In that case, you need to have a collateral. So that's how it gets decided that, okay, hey, which kind of loan will I have to apply to? And there are different, like more than 10 lenders right now in the market offering. Each lender has 6-7 products. So you have to select out of 70-80 loan products that, okay, which is best for me. And that is where GyanDhan comes into the picture. Yes. You tell us what is your requirement, and we tell you that these are the 5 options for you, and you should opt for this option because of this reason. Yeah. Absolutely. I think that's one of the best things about GyanDhan, because a lot of people lack this awareness. And the intricacies of the finance process, there are several intricacies around it. So having somebody to give you the proper advice and outlining, okay, these are the 5 partners, that makes it all the more easy. I've also come to understand, Aman, that oftentimes, let's say a learner is not, not going to a very prestigious universities, and I'm sure you look at rankings of those universities to determine that, or like you mentioned about the course as well, whether it's a course that is going to have a high earning potential, so on and so forth. Do you consider students also who don't meet these parameters? And in such a case, if you, let's say, are looking at academic performance, I think that's one of the major factors, then what are the pointers do you look at? Is it consistency in the scores? Is it like a high score? And how do, other determinants like gap years or backlogs, determine this? So these are not independent variables, I would say. See, so if you are consistent with your scores, with your academic performance, then you should be able to get admission to a good university, right? And when I say good university, unlike India, I'm not saying that, okay, you are just supposed to go to IITs, NITs. There is a huge range of universities. Like there are, I'm saying go to any top 500 university in the world. We will
Right.
arrange the finance for you.
Hmm.
And just because we are talking in this specific context, the universities in which upgrad usually helps students getting admitted into, for all of them, we have the loan products available,
Okay.
both with and without collateral.
Okay.
Obviously, the other criteria is that the income of the co-applicant for the without collateral loan, that should be in place. But that is there. Now, coming to your specific question, there are obviously hard cuts, right?
Okay.
So, for example, backlogs.
Yeah.
If now, let's say there are more than 10 backlogs. So now it is going to be very difficult to arrange an unsecured loan in that case.
Right.
Right. Then there we ask that, okay, can you arrange a collateral? A
Hmm.
good thing is that the collateral can belong to anyone. It need not be in the
Oh.
name of your parents only. If your uncle, aunt, any relative has a collateral and
Hmm.
they are ready to give their property
Yes.
as a collateral, then loan can be done on that. So if you have 10 backlogs, then we will ask for the collateral. Let's say if there is huge gap in the education,
Yeah.
right? Uh, so usually what the way the banks thinks is that, okay, hey, let's say, and this space is specifically to the Indian banks, that, okay, if you're 30, after that, you will get married and all of that, right? So your expenses will increase. So
Yes.
they sometimes not able to understand that why somebody 36 or 38, is trying to go abroad. And right now that is being reflected in the products with the banks. And they usually don't approve loan without collateral where age is very high.
Ages.
Again, there in such cases where we need to have a collateral and we'll ask that, okay, please arrange any collateral.
Sure.
So if such age cases are being handled this way.
Sure. Thank you. What I gathered from there, that is definitely a collateral loan is a much more safer and a surer option. And with that, I have a lot of questions around this topic of collateral loan. The first and foremost being that what kind of property counts as valid collateral? So a lot of our learners also have this question that whether farmland or agricultural land will count as valid collateral.
So if you would have asked me this question 3 months back, I would have said that no farmland, no agricultural land is acceptable, and which was a big issue in the industry. Happy to share that we have launched a product where we are able to get up to 25 lakh rupees
Wow.
even on the farmlands and agricultural land. Now that is subject to the states. Like few states still doesn't allow to lend money. Foremost example is Punjab. Like
Yeah.
in Punjab, I cannot give loan on agricultural land. But there are only just 5 states where right now the loan on agricultural land is not acceptable. The
Yes.
rest of the states, it is acceptable.
It is acceptable. All right, absolutely. I think that's a very important development because a lot of people who live in cities outside of the tier one cities actually do have a lot of farmland and agricultural land. Now, when we talk about, let's say, farmland and agricultural land today, they count as valid collateral. Sometimes they also may not possess the valid documentation around it. And can you throw some light on how can we ensure that we are maintaining all the documentation and being able to go ahead with the collateral loan?
Right. So there are two ways to do it. So you have to first collect all the documents that you have in place.
Yeah.
And there are many property lawyers in the market, right? Who usually, get all this property sale done or all of that stuff. You can approach to any one of them and say that, okay, these are my documents. Is it complete? Will I be able to get a loan on that? So that is the one way you can do it. Other way is that you can contact us. Even if you're planning to go 2 years down the line, we will help you with the customized document checklist. So the document of the collateral varies city by city, state by state. In fact, let's say if I talk about in Delhi, in South Delhi, different set of documents required as compared to North Delhi. So all such research we have done at our end, and when we get in touch with the customer, the student, we share the complete list of documents according to the requirement. So you can get in touch with us, get the list of the documents, and understand that, okay, if you have all the documents in place or not. If not, then you have enough time. You 2-3 months. It will take 2-3 months for you to make those documents. But you need to check way early because if at the last moment you are getting to know that a collateral document is missing, then there is nothing you will be able to do because you will have to defer your intake.
You'll have to defer
We've
your
seen
intake.
many such cases that because of the non-availability of certain thing, like I just give you an example, and that came as a shock to me as well when I first was introduced to this list of documents. So there is something called chain deed. So let's
Ah,
say if you have a
indeed,
house,
yes. Yeah.
right, you should have a document that tells in last 30 years
Yeah.
uh, who all have owned this property,
On this property,
right?
yes.
And one of the recent case I remember that was rejected because that person had chain deed of 18 years.
Oh,
Now, as a generic logical thing, I would say that okay, 18 years is also enough, but rules are rules. Banks ask for 30-year
yes.
chain. So all such nuances needs to be checked way early in advance so that you can uh, apply. Another thing that one need to keep in mind when you are giving agricultural land or any plot as collateral, it needs to have a boundary. If there is no
Yes.
boundary on the land, bank won't approve them.
Thank
So such small things you need to. So at times we've seen people to take a loan, they invested that 30,000-40,000 rupees just to make a
Yeah.
boundary around the property.
Sure, sure. Thank you, Aman. I think you've been able to explain that very well. Also, I think a lot of learners have this question that what counts as collateral. For example, we've spoken at length about agricultural land and property, commercial property or residential. But
Yeah.
other than that, you have other forms like gold. So,
Mhm.
can you also help us understand that as well?
Right. So as far as the education loan is concerned, the because the quantum is such, and especially abroad education loan, the quantum of money that you require is very high, 20-25 lakh rupees. Usually
Okay.
people like in 99.9% cases, I've seen property as the collateral.
Yeah.
0.1% I see fixed deposits, FD, as a collateral as well.
Right.
And typically that comes handy where let's say you have a FD of 10 lakh rupees and on that FD bank will give you 30 lakh rupees,
Okay.
taking 10 lakh rupees FD. Apart from that, government bonds are acceptable as the collateral.
Okay.
Gold is not acceptable for education loan, but then if you have gold, you can go ahead and take a gold loan, but
Okay.
you won't get the tax benefits and other benefits as far as the education loan is concerned. So
Okay.
primarily properties, FDs, government bonds, and the last is insurance policies. So let's
Insurance.
say if you have your father has a long insurance policy,
Hmm.
so there is something called surrender value. Let's say if you have to surrender the policy today, how much money you will get. So it is
Okay.
not equivalent to the coverage because coverage though you get
Yes.
for crores or 50 lakhs.
Yeah.
Uh, it is that what is the surrender value? Usually if your coverage is of 1 crore, your surrender value after paying the premium for 5-7 years will be somewhere around 10-15 lakh rupees. So against those as well, you can get the money. But
Okay.
again, usually I have not seen people doing all, doing
Yeah.
because this requires a lot of documentation.
Mm.
Uh, let's say if the policy is from LIC, then I'll need an OC from LIC. Then bank will need to verify from the LIC, and it's a so long process. In such case, then we usually get done the unsecured loan
Unsecured.
for the student. But if
Yeah.
unsecured loan is not a possibility, then we will have to do all that is needed, and all that groundwork is done by us for the students, even if that is one of the common example that I've seen is, and that is something might be relevant today as well, that many people have their home loans.
Home loans.
Right.
Yeah.
So on the same property now, people think that okay, I already have a loan on that property. Now, how will I get another loan? You can, depending on the value of the property. Let's say the value of the property is 1 crore, and you have a 50 lakh rupee loan
Hmm.
outstanding as of today. So
Right.
you will go ahead and get another 50 lakh rupees on the same property.
Yeah.
But the point is that both the loans need to be from the same place because the original document will be with one bank.
Okay.
So in such case, what we do is we transfer the home loan. Let's say the home loan is with L&T Finance. Now
Okay.
L&T Finance doesn't do education loan, right? So what we'll do is, let's say if I want to get it done, I will transfer the loan from L&T Finance to State Bank of India,
Hmm.
and from there I will first get the home loan resanctioned, close that loan, and on the top of that we'll get the education loan done. So
Okay.
all of these things we have cracked at our end, that all these use cases, and be able to help them getting through.
Sure. Absolutely. I think that's a very valid point. And that's actually a point of question also, that if you already have an ongoing loan on a property, you can take a loan on that provided you have closed that loan. That's
You,
exactly what you
even if
mentioned.
even if you have not closed,
Yeah.
If the value of the property is enough, you can
Yeah.
keep two loans, one home
You
loan, one
can keep
education
two
loan. The only thing is that both of them needs to be from the same bank.
from the
That's
same.
yeah.
All right. And there needs to be no timeline that the home loan needs
No, that's fine.
paid
That's
by
fine.
like next 5 years or 10 years. Okay. Perfect.
Both are independent. Yes.
Both are independent of each other. All right, that's great. One more question is, Aman, that, is there any kind of correlation between what is the value of the collateral and the loan sanction? So for a lot of these courses, on an average, learners are going to pay, let's say, 25 to 30 lakhs as tuition. And let's assume that is the amount that they are taking a loan form for. So what should be the value of the collateral against that?
So the value of the collateral should be at least equivalent to the money you need. Let's say if you need 20 lakh rupees, then the value of your collateral should be at least 20 lakh rupees.
It has to be 20 lakh rupees.
Yeah.
More or less, but you surely allow some kind of a margin.
Yeah. There can be margins here and there. So there is something called partial collateral as well.
Okay.
Right. So let's say without collateral, you are eligible for 20 lakh rupees.
Yeah.
Now, and you have a property of 10 lakh rupees. So we'll mix both. So we'll give you 10 lakh rupees on that 10 lakh property and 20 lakh rupees unsecured. So
right.
In a way, on a 10 lakh property, you are getting 30 lakh rupees. Right. So all of that can be done.
Perfect. All right. And also, if a learner has, this brings me to the next question, that if a learner has taken a loan, a student loan for their bachelor's, would they also be allowed to take a loan for their master's as well?
Again, that's a tricky question. So as far as banks are concerned, they usually say that, okay, because you're applying for 30, 40 lakh rupees new loan, and your earlier loan are usually smaller, 3 lakh, 2 lakh, 5 lakh. Yeah. So they say that, okay, close the earlier loan and get another loan. But NBFCs, on the other hand, are flexible around it. They will say that, okay, as long as you are processing that loan and, repaying the money of the earlier loan, we will be able to give you another loan on the top of it. You obviously, the other eligibility criteria will be checked, but NBFCs will be able to do it. Banks won't. Yeah.
Okay, perfect. And our courses also at upGrad, and this is for all our viewers, we have the courses divided in such a way that it's a hybrid model, as you would be already knowing, Aman. And there are a lot of students who also take loans for the first year before they go on campus. Now, in such a case, if the learner has taken a loan for the first year and also for the on-campus component, does the repayment start right after 2 years, or would they be required to pay the first year's loan before they go abroad?
No. So in your hybrid case model, both loans can be served separate, simultaneously.
Okay.
Yeah. And in the abroad education loan, the second year loan, so it depends on the kind of loan you're taking. If you're taking a secured loan, primarily your repayment will start after you graduate.
Yeah.
In unsecured loan, most likely your repayment will start immediately. Now, the repayment can be either just the interest component, like the bank will say that just pay interest and your principal amount repayment will start after you graduate, or bank can ask, okay, pay the EMI from the very next month. Now, that will depend. That's a subjective thing, depending on college course you're going for.
All right. Okay. Great. So it completely depends on the course that you're doing, and basically which university. Does the university also have a role to play in this?
Yeah. Yes. Yeah.
Yes. All right. Perfect. So a lot of questions coming in from the audience. And I think one of the questions is that when should the learners start with the whole process for, to apply for the education loan? So should it ideally be once they have applied for a visa, or should they, do it before that as well?
So I would say
time to apply for it, basically.
Right. Because education financing is such a big thing for abroad education.
Yeah.
I would say once you are applying, before that, talk to us once. Just a very 10-minute conversation, 15-minute conversation with one of our counselor.
Yeah.
Understand, let them know that what is your profile, your situation financially and otherwise. And if there are any red flags, we'll let you know upfront at the time you are applying for the courses. At that time only we'll tell you that, see, you don't have a collateral, your co-applicant doesn't file ITR. So we recommend that you only get admission in these colleges.
Yeah.
So that you will be eligible for a loan without collateral, without co-applicant. Otherwise, even if you get an admit, the loan will not be possible, right? So what I recommend is that check loan eligibility once at the
Yeah.
time of application, which you can do on our website in a couple of minutes. When you go on a website, there's a check eligibility button, and talk to our counselor for 10-15 minutes, one conversation. After that, once you get an admit, and on that day, reach out us back and say that, okay, now I have an admit, let's start the process. Usually for your visa processes, you will need the loan sanction letters
Yes,
in
absolutely.
place, right? So before visa, the day you are getting admit, or you know that I will be getting admit in next 3 to 5 days, at that point in time, you get in touch with us and restart that conversation.
Right. So right once they have the offer letter,
Yeah.
they can start with the process.
Yeah.
And,
In fact, before getting the offer letter, also you can be in touch with us. We'll help you with the documentation and everything.
yes.
But yeah, and there are pre-admits loan available as well.
Okay.
But yeah, for most of the cases, the process is once you get an admit, you start from there.
You start from there. Okay. And you would recommend you start as early as possible.
As early as possible.
As early as possible.
Yeah. Like if there are any red flags, you then will get to know much in advance so that you can do something about it.
Sure. And when you say that, when we start the process, Aman, so initially, what are the documents that the learner should keep in mind? What is the checklist that they need to have?
Sure. So in terms of the documents from the student, you need your KYC, which is PAN card, Aadhaar card.
Yeah.
Your academic documents, which is your 10-12 mark sheet. If you've done undergrad, then undergrad transcript and mark sheets. And if you've given GRE, IELTS, TOEFL, the score and the offer letter. So these all are the documents that is needed from the student applicant.
Yeah.
Now from the co-applicant, let's say if you're applying for the unsecured loan, then again the same KYC documents, PAN card, Aadhaar card, 6-month bank statement. If you're salaried, then the bank statement should reflect the salary per month,
Okay.
right? If you are self-employed, then we'll need ITRs as well.
You need ITRs.
We need ITR minimum 2 years.
Minimum. Okay.
Minimum 2 years ITR. And at times when lenders are in doubt, they will ask for GST certificate if available, or the business registration proof. And given the quantum of the loan, all of these things gets physically verified.
Right.
So somebody will come to your house or somebody will come to your shop to check there is a shop, right? Obviously that the process is optimized in such a way that it is done in a very short period of time.
Yes.
But all of these checks are done. So you cannot, obviously lie or, submit wrong documents. On the top of it, if you are applying for a loan with property, then the property documents will be needed. Your property documents are your chain deed, sale deed, your approved map, tax receipt, electricity bill. So these are the basic documents that are required. And on the top of it, extra documents if required will be communicated to the customer.
Okay, perfect. Right. And what about the CIBIL score? I think this is one question that many learners have, that when we talk about the CIBIL score, then ideally any score less than 600 is not considered eligible in most of the NBFC. So can you throw some light on that? And how is GyanDhan also optimizing this process?
Right. So I'll tell you, if the CIBIL is not only just checked for the applicant. Yeah. Will be checked for your father and mother both, plus the co-applicant. Nobody's CIBIL should do that. Okay. Now, so it's a very subjective thing, right? Let's say there is a student applying for an unsecured loan. The CIBIL is 650, right? And the student also going to not a very good college. So even in that case, 650 is not sufficient. 650. On the other, like I'm just giving you an example. On the other hand, if the CIBIL is, let's say, 625, but his friend is going to one of the top colleges, right? In that case, it can be considered. So on an average, above 650, you are good to go. Can be done. Below 650 is very subjective, depending on the college course. Why CIBIL is low? Is it, let's say, because for many people, the CIBIL was impacted during the time of COVID when the salaries were impacted. People were not able to pay their EMIs on time. Now that was a one-time event, right? And because of that the CIBIL was impacted, then that can be considered. But let's say if you were a willful defaulter, a not repaid back any loan, and loan has been written off. now that is something, very difficult to get approved.
Get approved. Yes, sure. I think that's one of the primary factors that people look at, NBFCs or let's say any loan partner looks at. But of course, you consider the overall profile of the learner, so as to say which university they're going to as well. But do you have any suggestions for how we can improve the CIBIL score? Let's say a learner is looking at a timeline of applying next year. They do have certain time in their hands to improve their CIBIL score. So can you help us with that as well? Yeah.
See, so CIBIL improves when you take more loans and repay them on time. So let's say if you if your CIBIL is low and if you have year or two in hand, try to take 2-3 different loans and repay them on time.
Okay.
Right. That's the only that CIBIL will get to know that okay, this person now has like repaying back on time. They will improve your CIBIL slowly, but it's a long process. Once CIBIL is impacted, improving it by a lot is a tough task. But good thing what will happen is that okay, the lender who is evaluating then will see that okay, let's say 5 years back you did something, but now after that you have taken 3 loans and you've repaid back on time. That's why I'm saying that okay, if you can take a couple of loans, repay them on time regularly, that will definitely give you a positive boost for the evaluation.
Sure. I think that's a very helpful piece of advice. So one learner has this particular question regarding the repayment of the loan. So we've been talking a lot about co-applicants. So is it possible that the education loan be taken solely by the spouse of the applicant?
See, applicant will always be there. Applicant will always be there, plus someone will be there. So now, as I mentioned that we work with a couple of international lenders. They give loan without collateral, without co-applicant. So then, apart from applicant, nothing is required. No one else is required. But there cannot be any case where the student himself or herself is not on
not applying.
Not on the
so the
loan
primary liabilities, if I can understand, is always on the student.
Always on the student.
Even if the student may not be a earning member of the family currently. And the co-applicant, of course, can be any blood relative or can be a spouse. And
any relative
that you've also mentioned. Right, perfect. And in that case, would the co-applicants have the benefit of the, will receive the tax benefits, or would you say it's only the applicant?
No. Co-applicant will receive the
co-applicant as well. All right, perfect. So thank you, Aman. I think we have covered on almost all the aspects. And just a couple more questions before we close this webinar. So a lot of our learners are inclined to know about what interest rates are applicable for both collateral and non-collateral loans. So if you can throw some greater light on that, please.
Right. I wanted to show this slide. So you asked the right question. So the secured versus unsecured loans. See, as the logic will dictate, because in secured loan, you are giving a collateral, the risk for the bank is less. And that's why they will charge a lower rate of interest. So secured loans, the rates are very less compared to unsecured loans. Secured loans, the rates are fixed, whatever it is, 9%, 9.2, 9.5. It keeps changing with the, RBI changing the repo rate. Unsecured loan starts at 10.5%. That is one of the lowest rate. The median rate unsecured loans, you will get at 11.5%. Okay. So that is the rate. So unsecured loans are almost costlier by a couple of percentage as compared to the secured.
Yes.
And that's why even if you are eligible for an unsecured loan and if you have property in place, apply for a secured loan because the chances of approval is more. The rate will be lower. In fact, the processing fee is also lower in the secured loan. They just charge a straight 10,000 rupees or so. Whereas an unsecured loan, it is up to 1 or 1.5% of the loan amount. So if you're applying for 40 lakh rupees, you will have to give 45,000 rupees upfront to the bank or lender. This is the processing fee charged by the lender, not by GyanDhan. GyanDhan services are completely free of cost. Secured loans are better, and it starts at 9. It's usually at 9%. Unsecured 10 to 13%.
10 to 13%.
Yeah.
Absolutely. And so you would ideally say that in a secured loan is something that the learner should opt for, even if, let's say,
they're eligible. For unsecured.
Perfect. So I hope that question answers, most of the queries for the learners regarding the interest rate. We just have 10 more minutes to go for this webinar. So if anyone has any further questions, we'd be happy to take them up. So there is a chat box here. So please put down your questions and, we can use the next 10 minutes to have your queries answered.
So there are a few questions in the Q&A section.
Right. So I
Yeah.
think we have, you've answered a lot of them during the course of your presentations. Some of them, of course, are related also to insurance. One interesting question we have is, does the learner need to apply for any insurance before going for the disbursement?
Yeah. So most of the banks will mandate it for you to take a loan insurance.
Okay.
Now, what exactly is this loan insurance? The loan insurance is primarily when you are applying for a loan and if you're going abroad. Now, God forbid, if something happens to you, right, then the liability of entire payment comes to the co-applicant. Now, initially you took the loan with the hope that, okay, you are going abroad, you will study, you will get a good job. So the ideal plan is not to for the co-applicant to repay the loan, right? So the bank asks you to take the insurance so that if something were to happen to you and if you are no more, in that case, the money will be paid by the insurance company. So usually this insurance is cost you around 1% of the loan amount.
Okay.
And it is mandated by the bank to buy this insurance, which will be part of the loan process itself. While this loan insurance, which is called loan life insurance, is mandatory, at times the lenders try to cross-sell more things like health insurance and all. So those are not mandatory. So one need to be careful about what is it that the lender is trying to sell you. And there are sometimes tricks in the market that the lender, the sales manager will say that, okay, it is mandatory to buy. So in all such cases also we come handy that, okay, hey, we know which is mandatory, which is not mandatory to buy.
Sure. Perfect. And you would say that it will be different for the secured and unsecured loan, the insurance.
It will be different. For secured loan, it will be a bit lower. As compared to unsecured loan.
And unsecured loan. All right, perfect. Since we're discussing about unsecured and secured loans, so the repayment period also happens to be different for secured and unsecured loans?
So usually for secured loan, you get up to 10 years.
Okay.
For unsecured loan, you get up to 10 years. For secured loan, you can get up to 15 years or even more.
Right.
But usually people repay in 3 to 5 years. This is what we have seen in the after graduation. 5-6 years is the max that people take in repaying the loan.
5-6 years. Perfect.
And there is no prepayment penalty as well, unlike home loan, car loan. You can prepay anytime you want. You
can pay anytime you want. Absolutely. When we talk about interest rate, Aman, of course, there can be fluctuations on the interest rate depending on the macroeconomic factors. And this happens to be one question from the learner. So do students' loans actually, let's say, go up or down, fluctuate as a result of what is happening in the external economy?
Right. Definitely. So all the loans, especially in the Indian market right now, are floating interest rate loans.
Yes.
And that is dependent on RBI's repo rate. So it's not like that RBI is increasing it today, bank will increase it tomorrow. There is a cycle. Some banks reset it in 6 months. Some banks reset it in 3 months, but it gets reset. Even the banks which are selling it by saying fixed interest rate, they also reset it in 2 years. So at max, you can be safe for 2 years. But again, if there is an if the RBI is increasing, at times RBI decreases as well. Right now, the macroeconomic parameters are such that, okay, inflation is increasing and that's why RBI has to increase the rates. But there will be a time once we are over this curve, RBI will decrease it.
But considering it's student loans, we can expect that it will not fluctuate as much.
It won't. It won't. The fluctuation is not much, right? It's in the difference of 1% here and there.
1%. Perfect. All right. So we have a couple more questions for you, Aman. I think that this session has been incredibly informative. And, there were so many questions that before this webinar, most of us were really unaware of the intricacies and detailed processes. And with your presentation, a lot of questions have cropped up as well. So in terms of that, when we talk about collateral loans, is it also necessary that the co-applicant needs to have a specific amount of balance in their account during the loan tenure?
No, it's nothing like that. What usually banks ask for is that they try to evaluate if the co-applicant has money equivalent to paying one EMI, so that they can deduct. So on an average, they just want to look at it, but it's not a very hard criteria, right? Because usually the loans are given on the future potential of the students, and the intent of the product is that the student will repay. So having an income, now obviously the balance should not be zero.
Yeah.
Right. But it is not a very hard criteria.
It is not a hard and fast rule. It's all more to do with the applicants' its status currently and the income potential that they're going to have. Perfect. Just we'll go on to take two last questions from our viewers before we close this webinar. One of the questions is, do we get loans against shares as collateral?
No, you don't. Shares are not acceptable. If you have shares, you will need to sell it and maybe create an FD, and against that FD you take a loan. Against the FD you take a loan. All right. So thank you so much, Aman. I think with that, we bring close to the questions that learners had for you as well. And once again, this has been an incredibly informative session. And if you would like to share any final thoughts to learners, so as they have a better idea on how to move ahead with this entire process, the floor is all yours. Sure. So I'll just like to end it with saying, like, abroad education is expensive and loans are a very important thing. But loans are available when you are going to a good college and course. So your focus should be getting to the admission to the good university, good course. You are obviously taking help of upGrad abroad, and they definitely have very good universities on their panels. So your focus should be just try to understand, okay, is it helping you? Is it whether after that course you will have an increment in salary, or whether you will get a good job or not? If that is so, then money will come. Money will come here and there. That's not an issue. Second is that don't just go by whatever your friends or your seniors are doing, right? Loans are such a personal thing. Like for one person, a secured loan can be best. For other person, unsecured loan can be best. So always consult with the right people. Compare options. Even let's say when you try to buy a phone, you check the reviews on Amazon, Flipkart. You check with your friends, and the phone you will buy at most 30, 50,000, 70,000, right? These are the product worth 50, 70 lakh rupees that you are going to buy. So compare it, then only take the decision before taking a loan. And again, that's where we come into the picture and can help you comparing the loans, finalizing documentation, end-to-end, even the repayment. So happy to help wherever needed. Do check the loan eligibility on the website, or let upGrad team know. They will connect you with us. So absolutely. Thanks a lot. Best of luck. Yeah. Thank you so much once again for your time, and thank you to all our viewers who've joined us today. I hope that this session has been insightful. You can always go on to GyanDhan's website and connect with the team for your questions. And there is a link to our website as well. And we'd be happy to connect with you to answer any further queries that you may have. Thank you for your time once again. Thank you. Bye-bye. Yeah.